Hi everyone, in this BitMEX tutorial I will explain what is the iconic 0.01% funding on the BitMEX swap, why it is an arbitrary number and why it has not been such a number in the past, why the index no longer fetches the bond rates from Bitfinex, what are the implications of all this, and why you can expect an average 11% yearly funding based on that. And I'll also mention that many exchanges have 0% funding, while BitMEX run at 0.01% funding when the interest rates are flat. Please give me thumbs up and have a look at the links in the description below, which will save you some money. So why is it 0.01% and not anything else? So it has not been like this in the past. Just to get some easy stuff out of the way, the longs pay the shorts 0.01% of their position value every 8 hours if the average premium or discount does not exceed 0.05%, which is the clump. This means that if the price of the swap is close to the price of spot Bitcoin on exchanges like Bitstamp or Coinbase Pro, then the funding will always be 0.01% every 8 hours, and that's 0.01% on the position value, not on the collateral that you have posted. So if you leveraged up, your funding will be quite expensive or quite profitable. So what is the funding calculation? The funding calculation takes into consideration the interest base on the XBT bond, interest rate on the USD bond, and the premium. So the XBT bond is the cost of lending Bitcoin daily. So Arthur came up with the arbitrary number of 0.03% daily, which is around 11% yearly. And he calculated cost of USD lending at 0.06% daily, which is around 22% yearly. And then the premium plugs into this, but we'll not delve into that in this video. So the indexes no longer fetch the data from Bitfinex, but are set to a constant rate due to extreme lending rate volatility. So you can see in these charts that this 0.01% funding and these arbitrary 0.03, 0.06% bond rates were not the case in 2017. So when BitMEX has started, it was smaller than Bitfinex. Bitfinex has been this behemoth exchange, and the price has been discovered there. And Bitfinex had and still has a very efficient lending market, and you can easily lend and borrow Bitcoin there. Same goes for US dollars. And you can see that this market has been very volatile, and BitMEX, to have fair bond values, they were just copying the interest rates from Bitfinex and using them on their exchange. So this was the same for the Bitcoin lending and for USD lending. So you can see that these rates have fluctuated a lot, and then at some point BitMEX has grown way bigger. It had way more volume than Bitfinex, and it was no longer reasonable to use the bond rates on Bitfinex, because that could have been easily manipulated, and then people could take advantage of that on a much bigger exchange, which BitMEX was at that point. And these days it's so iconic and so embedded that if you wear a t-shirt with 0.01% written on it to a crypto conference, everybody will know that this 0.01% refers to the swap funding. What is interesting, Arthur said that he will launch their Ethereum USD Quanta swap with 0.01% funding, and he will consider adjusting this number in the future, as these numbers are completely arbitrary and they mean different stuff for the Ethereum USD compared to Bitcoin USD, because this is a quantum, not a linear contract. However, the market is already efficiently dealing with the fact that going long on this Ethereum Quanta contract is better than going short. So the efficient market is achieved by having persistent positive funding on Ethereum USD. It hardly ever hits negative rates. By the way, you can clearly see that the premium on this chart, so this is the premium of swap versus spot markets, has been fluctuating wildly, and then it reached a period of stability, and then there was this massive spike on the Black Thursday. So this has been a massive anomaly. Nothing like this has ever happened on BitMEX. Since we are on this topic, it's reasonable to mention that the maximum funding on the swap is capped at 0.365% positive and negative. So what are the implications of all this? This means that if the price of swap is reasonably stable, the shorts will earn 11% yearly yield if they don't need to be exposed to the price of Bitcoin and prefer to be exposed to the price of US dollar. This is a very lucrative offer, and many are happy to take the risk of interest rate volatility, knowing that it's reasonably to expect that an average funding will be around 11% yearly, and they are taking the risk of these rates hitting deeply negative or deeply positive values. If the market was perfectly efficient and the cost of Bitcoin and dollar lending was equal, then the swap would always trade at around 0.06% discount and the funding would always be around zero, and then every discrepancy would be arbitraged to Deribit and some other exchanges which are also running 0% funding, like Kraken Futures, OKEx, and others. However, most of the time when the rates are flat, like even at the moment, the funding on BitMEX runs at 0.01%. I can only speculate why this is the case. And I think that the likely cause for that is that the market is not yet very efficient. I think that BitMEX offers unparalleled liquidity and safety thanks to the insurance fund, and people are more keen to go long there because they use stops, and stops on large positions need liquidity to get executed at a good price. So people are more keen to go long on BitMEX than to go long anywhere else. I expect that in several years, when the rates are flat, BitMEX will trade at 0.06% discount persistently, and the funding will be exactly the same as on Deribit, which is around 0%. And it's probably reasonable to mention that it's usually the speculators and gamblers who are long on the BitMEX swap and derivatives products, and it's the arbitragers who are usually on the short side. So the arbitraging entities are probably deliberately, by design, incentivized to go on this platform by having this positive funding. This is the way of attracting people to come to BitMEX and offer liquidity, because it's not very easy to convince someone to take his capital, convert it into Bitcoin, and take it to BitMEX and keep it there, earning some yield, taking the risk of exchange collapsing. Thank you very much for watching. Please give me thumbs up, comment, and subscribe. I reply to the comments, and have a look at the links in the description below. I only put links to exchanges which I view as trustworthy, with the exception of Bitsy, but I did put that in the description, and these links can save you a lot of money.